Hi and welcome to this week's Property Insider video. Today we look at all the latest property data to understand what's happening in our markets, and Dr. Andrew Wilson looks at first homeowner affordability going back many years, and his index results will surprise you. We'll also have a look at the difference between two major data sets where there's a considerably different view of what happened to property values during the September quarter. Now, does it really matter so many months later? Well, maybe not now. But it probably did matter if you listened to the wrong data and made property decisions at the time based on that. So if you want to keep up to date with the latest property data, please subscribe to this YouTube channel and click the little bell icon so we can keep you up to date as we bring out our shows each week. As the year draws to a close, it's fascinating to look back and see what's transpired. I remember when, at the beginning of the year, COVID was a little noticed blip in the eastern skies, but it morphed into a once-in-a-100-year event that led to lockdown, social distancing, and to a quick and deep fall in global as well as the Australian economy and GDP. Many people feared the recession would be deep, it would be long-lasting, but mainly due to huge easing in fiscal and monetary policies, including unprecedented stimulus and job support, Australia's recession was shallow. It was much shorter than many initially feared. Unemployment didn't rise to those double digits many forecast, and about three-quarters of the jobs that were lost have now been recovered. And as forecast by Dr. Andrew Wilson in these regular chats, the Australian economy bounced out of recession in the September quarter. In fact, it had a very strong GDP growth of 3.3%. However, what caught many people by surprise was the magnitude of the economic rebound, and that was helped by household spending, which rose 7.9% in the September quarter. At the same time, consumer confidence rebounded. Australians are now more happy to open their wallets. But businesses, they're a bit more reserved at the moment, and underlying business investment was down in the September quarter. And as we forecast many times in these weekly chats, our property markets remained remarkably resistant despite the economic challenges and despite a second wave of infection of COVID in Melbourne. Now, I don't want to trivialise the challenges many businesses and some Australians are still facing. And even though we're out of recession, clearly the recovery will take some time to have it come back completely. Unemployment and underemployment are likely to persist. Wages growth and inflationary pressures are going to be low. But the RBA has indicated it's going to do whatever it needs to do to get jobs growing again. In the meantime, while some people are suffering financially, overall household savings are significantly higher than they were at the beginning of the pandemic, suggesting that many households have built a healthy buffer, initially, I guess, to see them through what they anticipated could be a longer downturn. But now that their financial future seems brighter, many Australians are out spending again, and many are entering the property market. Some are buying their first home, others are upgrading their homes, and those investors who can manage to get a loan, they're out buying property there in force again too. So to understand what all this means for our property market moving into a new year, I'm looking forward to my weekly chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hello, Andrew.
Yes, thanks very much, Michael. Yeah, look, a very profound introduction as usual from yourself, and certainly covered a lot of bases there. And yes, we're surging towards Christmas at the moment, Michael, particularly in our housing markets.
Well, we're surging economically. People are out spending. I've been to the shopping centres again on the weekend, and boy, are they full. But if you go to open for inspections, if you go to auctions, there's people everywhere.
Yes.
And I'm even sensing in some sectors of the market a fear of missing out. So what's actually happening on the ground, Andrew?
Yes, Michael, we're certainly looking forward to the end of the year for the usual varied reasons, but there's no stopping our housing markets at the moment. So let's have a look at the past week in terms of the housing market performance. And as usual, we'll start by reviewing the weekend auction market results, and another very strong weekend. 3 weekends in a row now, Michael, above 80% clearance rates. You know, we can really significantly or seriously start talking about a boom time market in Sydney, particularly given we had well over 100 extra listings in the marketplace in Sydney last weekend. Didn't slow the market down at all, still over 80%. And Melbourne surged in terms of listings. Over 200 extra properties went under the hammer last weekend in Melbourne, and the clearance rate actually increased. This weekend, we're going to see more listings. It's really quite remarkable, the surge in buyer and seller activity in those Saturday auction markets over the past month and continuing right until the end of the year. And check out those Brisbane results. This is quite remarkable. We've seen now consistently auction clearance rates in Brisbane above 60%, pushing towards 70% last weekend, despite, again, a surge in listings into the Brisbane market. As we've discussed a number of times, Michael, auction clearance rates in Brisbane tend to be around that 45 to 50% mark typically. But now we're seeing these extraordinary results. And as we'll see shortly, they're being supported by other data sets. Adelaide and Canberra also strong. Canberra over 90% clearance rate at the weekend. And it's not just a single market that's standing out in terms of buyer and seller activity. It's really across the board at the moment. And this weekend coming, we'll see another surge in auction numbers, despite it being the weekend before Christmas. We can see the trend for Sydney has really consolidated its around that 80% mark over the past month. But once the shutdown restrictions were eased, it was off and running. The lower north and the upper North Shore were the top performers in terms of clearance rates in Sydney at the weekend. The Northern Beaches a little bit below that. That has been the front runner for most of spring, the Northern Beaches. But the adjoining areas of the upper North Shore and the lower North Shore produced the best results in Sydney on the weekend. Top reported sale in Sydney under the hammer at Port Hacking Road, Dolan's Bay for 7 million there. If we look at the Melbourne trend, we can see the roller coaster from shutdown ended with those easing restrictions in October. And really, we've settled now around those mid 70% results for the Melbourne market. Melbourne's southeastern suburbs were the top performers at the weekend in terms of clearance rates. I think perhaps that's been driven by a surge in we're using that word surge a lot today, but it's appropriate. A surge in first home buyer activity, looking at the more affordable segments of the market. And Southeast is certainly there, but it was the top result. But all clearance rates are over 70% in Melbourne. Property in East Melbourne, Melbourne East was the top seller in under the hammer at the weekend. And another strong result there in Surrey Hills, which has been a front runner in terms of top sales so far this spring. So that's the auction market, surely and clearly pointing towards a very strong across the board activity in all our capital cities. Our new listings data reported on a daily basis over the past week. We can see their new listings, not surprisingly, are falling quite sharply now with the Christmas break upon us. And that new listing decline is about Melbourne and Sydney. And of course, what we're seeing are auction listings declining sharply, because obviously we have a 4 to 6 week lead time into those auction listings, and that would bring us, if we started listing our property for auction now, into January. And of course, that's not going to happen, and that's why we're seeing Melbourne and Sydney pushing down new listings over the past week, following or looking into the holiday break. But we compare it to last year, we can see the market's still tracking well ahead of last year in terms of the new listings coming into the market over the past week. So typical end of year easing hasn't occurred yet overall in new listings, which gives us that position higher than a year ago at the same time. As I mentioned before, Sydney and Melbourne, new listings are falling sharply. And of course, that reflects new auctions not coming into the market. We won't see that rebound, new auctions rebounding until towards the end of January. New listings, however, are still coming into that Brisbane market, which is very, very solid at the moment, solid to strong. If we look at the new listings relationship or relativity index, we can see new listings in Melbourne last week, even though they fell, are now 73% higher than new listings in Sydney. And that Sydney market's really decided it's holiday time, particularly sellers, and they're going to wait and see until next year to keep the energy moving along. So total listings, no sign of a glut in listings as predicted by many in the market. This is the total number of properties for sale in the marketplace at the moment. Sydney falling, of course, but also we're seeing new listings fall because of increased selling activity. So fewer choices there for sellers. And as you mentioned, Michael, maybe the fear of missing out energy is working its way through markets at the moment because of fewer choices. That'll, of course, be ongoing into next year. We can see Melbourne is now over 30% higher in terms of total listings in the marketplace. And it's remarkable how that's turned around over the last month or so. Let's have a look at sales. Of course, the sales won't be affected by the same seasonal elements as we discussed with the auction market coming towards year's end. We look at Sydney first, still quite strong Sydney new sales, the newly reported sales over the past week, easing slightly, of course, some end of year energy there, but slowdown energy there, but still holding at quite strong levels as it has been over the past 2 months. Melbourne continues to rise. It's still below where they were at the beginning of the year, but Melbourne new sales are continuing to rise, and Brisbane's a superstar. Just look at that last month's results in terms of newly reported sales. Now, when auction clearance rates are at record levels in Brisbane, where we can see the volume of newly reported sales coming into the market is just quite extraordinary in Brisbane. That's a very strong market at the moment. So we can see over the past week, Brisbane sales up 11.5%, clear newly reported sales, clear leader of all the capital cities there. Melbourne also up by 2.6%. Melbourne sales are now over 10% higher than Sydney's newly reported sales. Again, a remarkable rebound compared to where we were 2 or 3 months ago. Now, that's the housing market. Let's have a quick look at the economy, Michael. Another, I guess, quite remarkable result is our share market that has continued to rise since the budget and the interest rate cut. Not sure we'll get to where we were prior to coronavirus shutdown, where we had that decline in the All Ords, but gee whiz, we've got a head of steam up at the moment. You never know, by year's end, we might get back above 7,000 and close to that pre-coronavirus level, which again would be quite remarkable. Australian dollar is even more remarkable. It's continuing to surge now, climbing above 75 cents. The energy that's driving that is perceptions of Australia as a safe haven economy to some degree, but also high iron ore prices there continuing to surge, which is always a positive for investment in the Australian dollar. And of course, weakness in the US dollar continuing, although I don't think that's as much a factor now as we're starting to move beyond the issues with the US election process, and also some slightly better data coming out of the US in terms of their economic performance. But the Reserve Bank wouldn't be happy with that dollar, given that their pronouncement that they are looking to push the dollar down. It's actually rising very, very strongly at the moment. Now, interestingly enough, we had last week the ABS released its house price data for the September quarter. Of course, the ABS lags around 3 months from the actual event, so it is really backward looking here. But I thought it was interesting just to compare with the data that we get in more of a real-time environment, and that typically is from CoreLogic that release its data on the first of the month for the preceding month. So they're really pushing prices data as it happens, or certainly with 1 month's lag rather than 3 months lag. But we can see the results here were actually quite different for CoreLogic's results over the September quarter versus the ABS official results. And we can see there that CoreLogic had Melbourne houses and units down quite sharply, whereas the ABS, it was basically flat house prices and unit prices over the same period. The real interesting one is Sydney, where ABS actually had Sydney prices increasing by 1.4% over the September quarter, and also increasing for units, whereas CoreLogic had reasonably sharp declines in prices for houses and units in Sydney over the same time period. Now, without doing this as a competition between the both, they use different methodologies, although they do use the same data sets. And the advantage for the ABS is that they actually have more results to model because they wait 3 months to get those extra results. But I think the interesting thing is that we look at correlating data. And particularly for the Sydney market, we did see that over the September quarter that auction clearance rates are actually quite reasonable. And it was always a bit questionable whether those higher auction clearance rates in Sydney over the September quarter did equate to lower prices as recorded by CoreLogic. And of course, we also saw quite a strong rebound in home lending over the September quarter in New South Wales. So that also pointed to higher rather than lower prices. But I think the real issue here, of course, is that regardless of arguments for and against either particular models, it is that when we do see those real-time or supposed real-time insights into the marketplace, it can have an impact on confidence. The media, of course, pick up those strong declines in prices in those markets, and it can, in the short term, reinforce buyer and seller sentiment. But when we look back 3 months later and sort of who cares, because it's 3 months ago, we can see that there can be real differences in the nature of the market as it's presented with those monthly CoreLogic results. But I think that's quite an interesting comparison, Michael. Now, I've also done a model on first home buyer affordability. We can now see that affordability for first home buyer is now at a record low. This measures the proportion of the typical first home buyer's income that they're paying as a typical repayment for the average loan. And we can see that that affordability measure is now fallen to a record low level. No surprise we're seeing affordability at a low level because we're seeing activity at a high level. And we've had a 32% increase over the first 10 months of this year in the number of first home buyers active in the Australian market compared to the same period last year. And of course, affordability is an important part of what's driving that increased demand. The biggest improvement was Victoria in affordability. The lower the affordability measure, the more affordable the measure. So falling by 6.5%. I think that fall would have reflected some easing in prices in Victoria over that September quarter period. And the relative affordability index shows that New South Wales is the least affordable for first home buyers. So no surprise there, given the high-priced Sydney market, that first home buyers are at the most disadvantage in terms of affordability in New South Wales. But of course, affordability has improved because we've seen cuts to interest rates, incomes are still growing, and they're the sort of key factors. And of course, prices were reasonably flat as well. But not sure that's going to last, these improvements in affordability, Michael, because we've seen the last probably of interest rate cuts for quite a while, and incomes growth's really not going to go anywhere quickly, as you mentioned earlier. And we're certainly going to see house prices increasing next year. So that's all for sort of an interesting but busy week again, Michael.
Very interesting data there, Andrew. And there's always been the argument that the baby boomers, the older people, had it easier. You don't understand, they tell us, how hard it is to get into the market. They don't understand, Andrew, that we had to go with a suit and tie, cap in hand to the bank manager. So
Yes.
how does your index take into account the other incentives, the government incentives currently available, the stamp duty incentives and things like that?
Well, this is a home loan affordability index, Michael. So what it's doing is looking at the measures of what first home buyers are paying, are borrowing, and we can do that with the ABS data. We can work out what their average repayments are because the ABS, we can work out what the average loan is, and from that we can work out what the average repayment is. And I use a benchmark of what the RBA tells us that average owner-occupier lending is from the banks at the moment. I use that as a base for a 25-year loan. So that can give us the repayment. And it is an index, so we're comparing like with like across the board with each of the states. I could reduce it to a capital city market, but I think the state market does reflect the capital city market, so we don't really need to do that. But the point is, it's about the lending criteria, Michael. The lending criteria clearly is about the level of income. And as your incomes rise, you can afford to pay more. As your interest rates fall, you can afford to pay more. So property becomes more affordable per se on that level, given the circumstances of set lending criteria. And that's the point with the banks. So what it means is first home buyers can borrow more now. That's why we're seeing, with a given income and a given interest rate, that's why we're seeing an increase in first home buyer activity, because even though, for example, the first home buyer deposit scheme allows first home buyers to borrow on a 5% deposit if they're eligible and if they're lucky enough to get one of the places, but they still have to go to the bank and prove that they've got the income to support that 95% loan, Michael. And if they can't do that, they don't get the loan. So it is all about income affordability or the affordability based on their incomes. And of course, that reflects the proportion of their income that they're paying off as a home loan, and we can work that out. And as that changes from period to period, we can see it either becomes more or less affordable. And if we track, it's interesting, Michael, also, if we track house price growth against that index, we can see that the higher house prices go, the less affordable it becomes, and vice versa. And we know we've had a flat period this year for house price growth generally, and that, of course, has been one of the factors that's helped improve affordability.
And it's great to see how many first home buyers
Yes.
taking advantage of the incentives of the low interest rates and the bank's interest in helping them. So that's going to create a whole lot of Australians who are going to have the security of owning their own home in the future rather than being tenants. Lots of data still happening in the last couple of weeks of the year.
Yes.
I look forward to catching up with you again next week, seeing what the last big weekend of auctions is going to bring
Yes.
and see what the next round of data brings. See you then.
Yes, Michael, it's an important week this week, not just because we're seeing an extraordinary end to the year in terms of buyer and seller activity in our auction markets and generally. But also we get, very importantly, the unemployment data for November coming out this week. So that'll be very interesting to watch.
We'll speak next week then. Thank you.
Thank you.